Hello guys, today we'll start advanced accounting chapter accounting for employee stock option plan, and today we'll deal with illustration 1. First we'll read the question, then proceed with the further answer. A company has its share capital divided into shares of rupees 10 each on April 1st, and it grant on April 1st 2011 it granted 1000 employees stock option plan at rupees 40 when the market price was 130 rupees. Options were exercised between 15th March 2012 and 31st March 2012. Employees exercised their options for 9,500 shares only. Remaining options lapsed. Company closes its books of accounts as on 31st March every year. Show the journal entries. Here we need to show the journal entries related to these options, okay, at the end of 31st March 2012. Now we'll book the journal entries. Journal entries format will be journal entries in the books of A Company Limited on the year ended 31st March 2012. Okay, so these shares were issued at, I will come to the explanation now. So these shares were issued to the public at April 1st. April 1st issued, okay. Then these ESOP option was given to them, and these were exercised. ESOP option was given to its employees, and these were exercised between March 2012 and 31st March 2012. Now what they are telling is they issued for 10,000 employees at 40 rupees each. In this, 9,500 employees subscribed at rupees 40 rupees. Okay, remaining 500 got lapsed. 500 lapsed. Now what they are telling is they exercise this. Please book these journal entries in the books of accounts. Okay. Now the first journal entry, we received amount from employees. That should be bank account debit. Okay, how much we are getting? 9,500 shares into stock into 40 rupees will be, here will come date, particulars, debit, LF, debit and credit. So this amount is getting debited into the bank account, 3,80,000. Next, employee compensation expense account. Now what is this account? Basically, in this is at the market price of 130 rupees. This share is given to the employees at 40 rupees. So what is the price that company should pay instead of the employees? That is 130 minus 40 will be 90 rupees. So the company has to pay 90 rupees, and this the company will treat it as an expense. This expense is related to employees, hence we are treating it as an employee compensation expense account. So 9,500 rupees into 90, this will be 8,55,000. So now we have got the amount. 2, equity share capital account. Equity share capital account. These are the shares which we are purchasing. Now always equity share will take into account only the price which it was issued. Here they have mentioned that company has divided its shares into rupees 10 rupees per each. So the face value, always you need to take the equity shares and the face value. So we have in this account, we 9,500 employees subscribed to it, hence 9,500 shares into 10 rupees each. So the face value of the share capital will come around 9,50,000. And so the remaining will go to premium account, securities premium account. Whatever the excess of the face value which we are getting, those will go under securities premium account. So to securities premium account, 9,500 into, okay, here we'll write 130 rupees minus 10 rupees will be 120 rupees. So that will come around 11,40,000. Okay. So this will be the entry for accepting, giving the shares to the employees and accepting the amount. This is the amount. So being allotment of employee stock option plan. So this is done. As we know that income and expenses will be transferred to profit and loss account. Now here also we incurred some expense. So this we will be transferring it to the profit and loss account, P&L account. Now debit all expenses and losses. See here you can see debit and credit. So debit expenses to employees expenses account. Now how am I writing this? P&L account debit to employee stock option. So like this you have to see the journal entries.
As the golden rule of accounts says, debit all expenses and losses, credit all incomes and gains. We need to see it in an account format. Like here, P&L account debit to expenses. So expense to be debited.
Okay. Now P&L account, profit and loss account, debit to employee stock option, employees compensation expense. How much we have occurred? 8,55,000. 8,55,000. Here being employee compensation expenses transferred to P&L account. That's all is this question. I hope you guys have understood. Let me know in the comment section if you have any doubt. I'll be there anytime to clear your doubts.
Please subscribe to my channel. That makes me to do more videos. Remember, you're a successful chartered accountant. Have a good day. Bye bye.